All right, let's dive right in. We've got a huge story to unpack today from the energy giant Sempra. They just dropped an announcement that's a massive bet, and I mean massive, on where American energy is headed. So let's get into it.
So, to really get what's going on here, you have to ask yourself a question. Think about the biggest tech trend out there right now. AI, right? Everybody's pouring billions into it. But what's the one thing, the one resource they absolutely cannot live without to make all that AI magic happen? The answer? Probably not what you're thinking.
It's power, just tons and tons of it. We're talking staggering amounts of electricity. Why? To run these gigantic data centers that are basically the brains of the whole AI revolution. And you know what? This bottomless appetite for energy, it's kicking off one of the single biggest investment opportunities we've seen in a long, long time. Okay, so here's how we're going to break this down. First, we'll dig into Sempra's $65 billion bet on Texas. Yep, billion with a B. Then, we'll see the solid year they just had that's making all this possible. We'll look at how they're going to fund it, get into the whole data center boom that's really driving this, and then wrap up by weighing the good with the bad, the promise versus the risks. First up, let's talk about that $65 billion Texas bet. This is the big, flashy number from their latest investor update. And believe me, it signals a major, major acceleration in their game plan.
Okay, just let this number sink in for a second. $65 billion. That's Sempra's new game plan for the next 5 years, from 2026 to 2030. And it's a huge jump, 17% bigger than their last plan. This is them basically shouting from the rooftops that they're going all in on what they think is a once-in-a-generation opportunity.
Now you might be wondering, where is all that cash going? Well, this isn't some wild gamble. Check this out. About 95% of this enormous plan is aimed squarely at their regulated utilities. This is all about making smart, deliberate investments in stable assets that offer predictable, high-growth returns.
And this chart, it lays out the whole strategy perfectly. Just look at the difference here. You've got Sempra California growing at a decent, modest rate, but then you look over at Sempra Texas, and boom, we're talking a projected 18% compound annual growth rate. So the takeaway is simple, and it's a big one. Texas is now the main engine driving this entire company forward, period.
So how did they even get to a point where they could make a bet this big? Well, a plan this ambitious doesn't just appear out of thin air. It's built on the back of what their CEO, Jeff Martin, called a foundational year in 2025. It was a year that gave them both the cash and the confidence to go for it.
And what a year it was. I mean, they absolutely crushed it. They hit a record $4.69 in adjusted earnings per share right at the top of their guidance. They pumped $13 billion into capital projects. And, this is key, they announced a $10 billion sale of a piece of Sempra Infrastructure Partners, which unlocked a ton of value.
Okay, this brings us to the million-dollar question, or I guess the $65 billion question. How on earth do you pay for all this, especially when you go to Wall Street and say you're not going to ask them for more money by issuing new stock?
So, how are they going to pull this off? Well, Sempra's got this really clever three-step self-funding plan. Step 1, they expect to generate a whopping $50 billion just from their day-to-day operations. Step 2, they're going to take that $10 billion they got from selling off that infrastructure piece we talked about. And what's the result of all that? Well, they can fund this whole massive plan without having to issue a single new share of stock, which is music to investors' ears. And don't just take my word for it. The company CEO, Jeff Martin, laid it out plain and simple. He said, with efficient sourcing of capital, we now have no need for common equity issuances to fund the base capital plan. You can't get much clearer than that, and for investors, that message of financial discipline is incredibly powerful.
So we've covered the what, the where, and the how. But now it's time for the why. What in the world is driving this unbelievable demand for new investment in Texas? Well, this is where we get to the real story, the hidden engine behind this whole thing.
You got to see these numbers from Encore. That's Sempra's utility down in Texas. In just a single quarter, right, 3 months, the amount of power people are asking to connect to the grid shot up from 226 gigawatts to 273. That's insane growth. And look at what's behind it all. See that line? Data centers. That piece alone jumped from 210 to 255 gigawatts. It is, no exaggeration, a gold rush for electricity.
Now, to handle all this crazy growth, Sempra has to work hand in glove with a group called ERCOT. That's the Electric Reliability Council of Texas. The easiest way to think of them is like the air traffic controllers for the state's entire electrical grid.
They're the ones managing power for over 26 million people and giving the green light for the huge projects needed to keep the lights on.
The CEO of Encore, Alan Nye, put it about as simply as you can. When he was asked on the earnings call what was driving all this demand, he just said, "The first part of the answer is data centers are continuing to show up looking for service on our system." That's a straight from the source confirmation of this incredible trend.
All right, let's start to bring this all together by looking ahead. When you're talking about a plan this huge, it's so important to keep a level head and look at both sides of the coin, the massive opportunity, but also the very real risks involved.
So here's the promise part, spelled out in dollars and cents. Sempra has laid out a super clear roadmap for how they see their earnings growing. It all leads up to a 2030 forecast of somewhere between $6.70 and $7.50 a share. For a utility company, that is one of the fastest growth projections you're going to find anywhere.
So when you boil it all down, it looks kind of like this. In the promise column, you've got this amazing 11% rate base growth, another $9 billion in potential projects that aren't even in the main plan yet, and that really strong 2030 earnings forecast. But then you look at the peril column. You've got to worry about regulatory headaches back in California, the huge risk of just, managing a project this big, and the big question mark of whether all those data centers asking for power actually get built.
And that leaves us with one big final question. When you see them pouring tens of billions into the actual wires, the poles, the whole infrastructure that's going to power this AI boom, is Sempra literally building the physical backbone for America's AI future? It's one heck of a bet, and you can be sure everyone is going to be watching to see if it pays off. Thanks for tuning in.